Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange on this Thursday. Markets are really hovering around these session lows at this point. We got a lot for you. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Thank you both for being here. Alan, your first name is in the tech realm, in semis, and looking at Micron. Why is this one jumping out at you?
Well, we have to back up a little bit and talk about the macro picture. And you had your last guest on, and I want to be a little bit more optimistic. I see three steps so far that are positive for the bulls in the right direction. We've had the big bounce, and this has happened over and over again. These last four major sell-offs, we had new lows, but on lower volume and a lower VIX. So the VIX right now is down, at the 25 level, at a level that we have not been to since April. Now, we haven't yet seen the stocks break out, but we are trading sideways after that bottom bounce. We're trading sideways for the last 10 sessions between, 4,000 and 4,200. Breakout their target's 4,400. So I see some technical positives if we can get a bounce. And what I'm going to do today is a little financial fishing, because I know how Ben loves to go fishing. So I'm going to show you how to do some financial fishing, and Micron's the first one.
Oh, okay. How do you like that? I like that setup. And I think those are interesting points you made, and Ben's going to look at the charts here, but that the lows have been on lower volume and a lower VIX. Also interesting. What do you think, Ben, as you take a look at the Micron chart?
Well, I think this is a stock that, last time we looked at it, we had established a bit of a trend environment to the downside. I think it was middle to end of May. And we had established a bit of a sideways consolidation that was forming between 78 and we'll call it 66, 65. And as of what I'm seeing right now, as we dive into the chart, we can actually just kind of update this real quick and now sort of elongate this balance area that's been forming. So again, we have three very well-defined areas of consolidation here. And since the 23rd of May, we've really just remained in this range. Again, we're talking about this lower extreme here from 65 to 76. Now, we always talk about when does this pattern reverse? When can we say that the working assumption that this market's trending lower is no longer a valid one? And that comes into play once we work through the middle of the last area balance that forms. So in this instance, we're looking at the middle of the number 2 here. Until we get something going to the upside, this is still a trend environment to the downside. No indication that that's been rejected. And we're just kind of testing a lower extreme of this range at this point. Again, balance area number 3 is identified here. But if we were to find some strength, Alan, and here's why I think I can buy into your points and the comments you just made. If we were to get some strength here and build momentum to the upside through 76, for example, take out the upper extreme, work our way through the middle of this range, the middle of balance area number 2, again, 82-ish, 83 would get me really excited about ticker symbol MU. And let me show you why, because on the bigger picture, as we just take a look on the daily time frame, you can see that, we've actually seen value is forming at higher and higher levels. The move lower that we just looked at, again, just part of that bigger move from 98 down, but we're at the lower extreme of the balance area right now on the bigger picture. So strength at the lower extreme here right now, continued momentum up, that would favor potentially we kind of just work our way towards the upper extreme of this range. So basically, we've been trending lower on an intraday time frame, but if we could build some momentum off a recent bottom, and here you can see there has been support around this level in the past. If we could build some momentum around this level here, we could really get something going to the upside here. I think it's going to be key to watch rates, the broader market as well, in terms of how it fares amidst all of these concerns headed into the Fed meeting next week, and really higher rates, just the impact they've had on tech.
So that's the question. Can you get that momentum that Ben is talking about here, Alan? You think it's possible?
Well, that would be a confirmation. So the way that I fish and try and find the bottoms in stocks, and I like Micron from a PE standpoint, PE is 8, is 25% off its top from January. It's up 140% from its COVID lows. And like Ben showed, 65 to 75 for 2 months. A range breakout target's 85. So that would be a confirmation for me. I've got some comfort in fishing in this stock, and buying a 85 call for August is trading for about 7 or so. And so it gives me the right from the low. And I've got limited risk. I can sleep at night. More importantly is if we get this breakout, the payoff is significant. You get the move up to the 85, which is not that big a move in Micron. that option would gain 167%. So it's about limited risk and the payoff and the stock setup. The breakout above the 75 would be that confirmation for me for the first step. And that option would do very, very well.
That's interesting. So, and what kind of, as you mentioned, the timing of that option trade? Because right now it's at 67. If you were to go even longer out, what would you be looking at?
Well, the August option has a little bit of time. It's almost 3 months of time.
Yeah, that's true.
I would like to see how the macro market develops. And if you look at the NDX is chasing above 13,500 in the midpoint of this last leg. So I think the tech area has the best risk reward. And this is a stock that could get some momentum moves, as we've seen in, time and time again. I like, a lot of these tech stocks that have been forgotten about, that the Facebook, the Apple, the Amazon, everybody, to get a little momentum move once we see an additional breakout in the S&P.
Okay, and then that brings us to Sienna, because that one is right around the 52-week low, not far off that 52-week low recently. Alan, why did this one jump out at you?
Well, the theme for today is this bullish divergence, is where it's made new lows but highs and volatility. So this is another stock that I like from that standpoint. It's been mainly between 50 and 70 over the last year. So the midpoint target on that 60. I'm looking at the October 45 call, trading for about 650. And the October option has 4 months of time. So, that's a way to set up for myself. The low in the stock is 46. So the option gives you the right to be long with limited risk from 45. So that's my comfort level as far as putting my chip down on this stock, making a bit of a Sienna comeback.
Right, understood. Okay, so what do you think here? Is there a bullish chance, a divergence that could occur, Ben?
Well, I think this...
Look at this chart.
I think this stock is in a very similar pattern in many ways when you're looking at the hourly time frame. We were talking again about Micron, the three areas of value that formed again, and the trend that we are seeing to the downside as these areas form at lower and lower levels. Look, here you can see again almost a identical situation. Now, a little bit different in that, we're still holding this lower extreme. So I say different in that on the daily time frame, not exactly the same picture. Here you can see that move that we just looked at from 71, just part of the bigger move off that 78 high that we saw when we maxed out at the end of December. Here you can see some high conviction vertical moves to the downside too. These balance areas, not necessarily as symmetrical, I guess is the best way of putting them. If anything, they're kind of like a bit of a channel to the upside, but you can see well-defined vertical conviction that separates these areas of consolidation. So there has been some high conviction selling going on. I wanted to take a step back real quick and just look again at that daily time frame, but here you can see a breach of the 50-day moving average, a breach of the 200-day moving average here within that high conviction we saw to the downside to begin the month of March. They retested it, if you remember, mid-April and failed. And look at that cascading price activity since. You mentioned almost near a new 52-week low, just hanging out around this 46, 47 level, Nicole. No real lean one way or the other on this one right now. If anything, unfortunately, I'd have to feel somewhat, kind of subscribe to this weakness that we've seen as it's yet to reject these lower levels, but just no real lean, no real tilt one way or the other, just kind of watching this one cascade lower.
Okay, understood. Cascade lower. But you think there's opportunity, Alan, and that's the whole premise between your trades today.
Right. That's the idea today. Is it's a way to position for a pump in the stock. You're going to see, as we've seen in the markets, when all of these people that have been short these stocks for a long time have to cover their positions, have to take profits, it'll feed on the stops up above, and you'll see a bounce. Now, whether it's sustained, I'm not making that call. Markets will tell us. But at some point, there will be some short covering in these stocks, and I think they offer some good value, some great risk reward, and I like how the charts have set up. This is a strategy that I've used in the past, and it's been successful. You buy enough time, you've got your chip down, you've got an in-the-money option, gives you the right to be long from a level lower than we've been, and we're positioned for success if and when we see some short covering in these stocks.
Understood. Okay, last but not least, let's check out Lyft. When we think about Lyft and Uber, it's different than these other sort of tech-related names. Tell me a little bit about this one, because this is an exciting name.
Well, this is the opposite chart. There's not much positive here. We do see this bullish divergence. We do see the fact that it's trading sideways. But this is more anecdotal as well, because here in Chicago, we were coming back to life, and the Lyfts and the Ubers have been able to raise their prices. And it's an interesting phenomenon. They got us hooked, our fishing analogy here today. They got us hooked like they did on money machines when I was younger. It was free to get cash out of the machine, and they charge you. They got us hooked on these Ubers and Lyfts, and now they've got pricing power, and they're raising prices. So let's see what happens. But looking at the chart, this is a chart that looks ugly, bad enough to buy. But we've been trading between 7 and 22.5 for the last bit here. A breakout of that target's 27.50, and there's a gap all the way up to 30. So again, it's about how this reacts when there is some short covering, some profit taking. So to cover that, I'm going to go all the way to January. By the January 15 call, which is in the money, obviously we haven't been down to 15. That's trading for about 550. He's got plenty of time. And if we get up to 30, if you look at this chart, is not that high. If we get up to 30, this option will about triple in value. So it's about risk reward, and it's just about psychological sentiment. It is so bad right now in Lyft that, I don't think it first. Obviously, the price can go down further, but from a psychological standpoint, and the measurement of that is that bullish divergence, you're seeing that the sellers are running out of strength, and that's something to take advantage of.
Mm-hmm.
Okay, final thoughts here. Ben Lichtenstein, what are you thinking here?
Alan, bad enough to buy is a new one for me. I've never heard this, but I do understand the mindset behind a stock being overdone to the downside. Again, that's for me, though, when you kind of sit back and wait to see some momentum to the upside to kind of confirm that working assumption that it has been overdone. And that happens. We talk about that. I do want to just point out some of the areas of value that we've seen as of recent, how they continue to form at lower and lower levels. Here you can see a high conviction move to the downside on earnings, that imbalance that was created after a well-defined overlapping rotational period that we spent throughout February, March, and April. Again, earnings really tipped the scales. Now, since you can see, we've just kind of formed a new area of consolidation at a lower level, so just kind of highlighting that. But I wanted to move away from the intraday look, and here you can see on the daily time frame, last time we talked about Lyft, we'd identified a bit of a channel that they shares had been in to the downside. You can see that high conviction breakout, the reaction to the earnings. We just mentioned that big move lower, and how we're just kind of hanging out near the support level that we found a low, if you remember, back in March of 2020. Now, I did want to just kind of look at this daily time frame and bring some moving averages in. Again, you can see that support we found back in March of 2020 down around that around the $14, $15 level. Here you can see breaking down below the 50-day, breaking down below the 200-day moving average in November. We tried to get up above a couple times here. The blue is the 50-day. It's really struggled. So again, this is not necessarily one that I've seen show any signs, any indication that we're really being able to lift this one off the mat. Still kind of up against the ropes, I guess is the best way of putting it in many ways. Look at this year to date down almost 60%.
That's the whole point. And, bad enough to buy, I think, is a very funny phrase. It's very interesting because the fundamentals, as you look at that, they are frightening, but at the same time, the concept is real. Alan,
right.
Final thoughts.
Well, I want everybody to understand the way that I'm approaching this and the way that I'm fishing for stock bottoms is buying these in-the-money options that actually give you the right to be long from lower levels. Being long Micron from 65, being long Sienna from 45, and being long Lyft from 15 are all below the lows. So think about it. If you had a limit order down below the lows and you got triggered, that's what this option gives you the right with limited risk. But the key is plenty of time. So I have my breakouts that I'm looking for, and then that will be confirmation that the market's moving in favor.
Well,
all right. Yeah, Ben, go ahead, chime in. I want to hear.
I was going to say a bad day fishing beats a good day at work. So even if these trades don't work out, the mindset here I can understand.
Alan, Ben loves to go fishing, but he's complaining about the gas prices, as we all are. Right? I said you got to catch your dinner, and that's what we got to do. Alan, tell me. I love when you guys start chatting. Go ahead.
Ben and I worked together, and we were down when gas prices made their all-time highs. If you adjust the price of the high of 150 for inflation of 2008, crude oil has to get to $200 a barrel. So we're not there yet. It was a lot hot, a lot worse in 2008, if you can put it in perspective.
Yeah. All right. I caught a fish once. It was this big, but then it got away, Just kidding. Alan Nuckman, Ben Lichtenstein, nice to see you both. Thank you very much. It's a pleasure. Coming up next, we're going to spotlight symbolic